Stock markets in Europe are currently trading broadly flat, with the UK's FTSE 100 index off around about 10 points, while the Euro Stoxx 50 index is higher by 5 points. The DAX in Germany is up around about 14 points. US stock futures are tracking a little higher. Dow's up about 10 points, S&P up about 1 point. Across the board in the commodity space, gold is up $10. Oil prices are a little higher, but off their highs. They're well, NYMEX is up about 80 cents a barrel, but trading at $107 per barrel, and of course Brent is also up about 80 cents, but currently at about $111 per barrel. That's way off that $115 per barrel mark that it reached as the escalation of the Syria tensions hit investor sentiment last week. And in other asset classes, bonds are back in favor, with gilts and bunds tracking all higher, and yields easing somewhat after the UK 10-year yesterday hit over 3% on the yield, which is a big rise, and FX markets are pretty subdued, so not much to say there. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So, the big talking point for a lot of people is, of course, President Obama's speech on Syria. He came out last night, struck a bit of a balanced tone. Essentially what he said was the US is still prepared to act if needed, but we're going to go for the diplomacy here. Speak with Russia about getting Syria to give their chemical weapons away and essentially disarm the country. That was the first acknowledgement by Syria that they actually have chemical weapons. So the US itself now is in a position where they have provided evidence which suggests that this is true, and Syria has almost given in and said, yeah, we do have chemical weapons, but we're going to sign them over, let the international community know where our chemical sites are, and essentially not use them anymore. And that's basically meant that President Obama and the US itself, the US military, can hold off from striking just yet. They haven't said that they're not going to strike. They possibly could still strike. It really all depends on the negotiations between Russia and the US. Russia, of course, is fighting on the behalf of Syria. They want legality on this issue, and at the same time they think that well, they have strategic and financial ties with Syria, so it's in Russia's interest to back Syria. They've said that they will respond with military help if an escalation of the crisis in the Middle East takes a turn for the worse. But at the moment, we are starting to see some of the fears receding of an imminent strike, and now the focus is really shifting to US and Russian talks at the UN to see if we can get some sort of reconciliation and some common ground between both countries. We also have to remember that the US is now a country which has not got that sort of defense spending that it used to have. It's also haunted by the specter of previous mistakes in the Middle East, particularly at the Iraq War of 2013, which has dented their reputation in the international community. And what President Obama has found very difficult this time around is getting that sort of congressional support in order to strike at Syria. Now, the reason why he's found it very difficult amongst his peers is because at the moment the US is too concerned with domestic issues. There's a recovery in place. They need to appoint a new Federal Reserve chairman. At the same time, they need to find a new budget so they can raise the debt ceiling, which is something they've been kicking the can down the road for a while. So they actually really have to address this time around. At the same time, they just don't have that sort of arsenal that they used to. So people in America are quite unsure and unconvinced that a military strike is the right response to these chemical attacks in Syria, and they would rather wait for some sort of negotiations to break through and a deal to be hammered out between both countries before any sort of intervention really takes place. So that's helped the market. Sentiment has cleared up on the back of that, but we are still worried about a number of issues. Of course, we have the prospects of the Federal Reserve tapering in September, which has set the narrative that keeps the market very uncertain and very vulnerable to any sort of talk about from Fed members about what's going to happen next. And at the same time, we're extremely sensitive to economic data out from the US. We don't have much on the board today. We have jobless claims out tomorrow. which is going to be key, as we know that the labour market is the key focal point for any sort of tapering activity by the Federal Reserve. An improvement would suggest that the Fed will taper, and if not, then if we see a decline in the labour market or slower signs like we did with the payrolls report, it leaves investors feeling a little bit more confused, as we know that the Fed would like to see an improvement there before they really kind of look at tapering quantitative easing. At the same time, we also have the University of Michigan confidence release out on Friday. In the UK today, we have jobs numbers, which are very important, and again important because the Bank of England has now put down thresholds and linked it to their monetary policy. So if we see again an improvement in the labour market in the UK, then it's likely that we are going to see a rate hike, possibly a lot earlier than what the new governor, Mr. Carney, has set out. He's put a threshold out for late 2016, but right now the gilt yield is pricing somewhere around late 2015. So the market is unconvinced about this forward guidance plan. So going ahead, there is a bit of uncertainty on board. Although the Syria tensions are easing somewhat, in general the market doesn't want to get too ahead of itself and would rather wait out, so people aren't really putting all their chips on the table just yet. That's all for your daily market bite. Thanks for listening, and I'll see you guys tomorrow, and I'll discuss all other issues affecting the market. I think jobless claims will be the key focal point. And yeah, have a good one. Cheers.